We have all heard about literacy and how important it is to current and future success. Literacy is defined as the ability to read and write. But have you ever heard of the term financial literacy? Financial literacy is defined as the ability to understand business and finance and its basic principles. Financial literacy encompasses many aspects of how to manage your money from the very beginning all the way through retirement. Today, I'm going to talk about several components of financial literacy. We're going to talk about budgeting, managing your money, credit reporting, and investing in retirement. Your first experience in financial literacy may have been when you received that first birthday check from your grandma and grandpa. You didn't know what to do with it, and thus began your journey to becoming financially literate. I've been in banking for 27 years, and I've seen a lot of financially literate people come through my office and some people that weren't so financially literate. I can tell you, understanding finances can make your life a little bit easier and a little bit more joyful. So let's talk about budgeting. Budgeting is in its simplest form, basically listing on one side of a sheet of paper your income and on the other side of the sheet of paper your expenses. You add your income, subtract your expenses, and that's what you have left over for the month. Or sometimes that's your shortfall for the month. It is important to keep a budget and to include savings as part of that budget. Here I have an example of a budget. The income is listed, and then the expenses are beneath that, and to the right of that, the actual what you spent each month is also listed. This is a very simple budget. There are many templates online that are available. They range from complicated to the very simplistic forms. The important thing is to create a budget and stick to it. The next component I want to talk about of financial literacy is managing money. Managing money, the first important thing is to follow that budget. Also know that budget is a work in progress. You can always change it if your income rises or falls, or your expenses increase or decrease. You can change a budget monthly, twice a year, or annually. Again, I want to reiterate, it is important to keep savings as part of your budget. Let's talk a minute about balancing checkbooks. You may say, balancing checkbooks? That's for dinosaurs. Well, I can tell you there still are some dinosaurs out there that come in and balance their checkbook every month at the bank. They have their checkbook registers and their bank statements and want to see it balanced to the penny. However, with that said, I do understand that with today's technology and mobile applications, online banking, that checkbook registers may become a thing of the past. The important thing to know is to look at your account often. I would recommend at least 3 times a week, check your account online. Check it for accuracy. Make sure the right amounts are being deducted and the right amounts are going into your account. Believe it or not, banks have been known to make mistakes. A big portion of financial literacy is credit. Credit entails credit cards, installment auto loans, mortgages, and student loans. The first experience you have with credit may be a credit card. Whether it be a small store card or a small Visa, MasterCard, that's usually your first foray into credit. You then go on to an auto loan, an installment loan. It is important to have good credit as you will get a lower interest rate which can give you lower monthly payments. I'm going to touch on credit reporting in a few minutes. Then, after installment loans, home ownership is really important and truly the American dream. Having good credit will help you get that mortgage. Student loans. I just want to touch on a minute. Make sure you're managing your student loans and trying to keep that debt as low as possible. taking advantage of scholarships, and even trying to pay off some of that student loans before the payments are due are great ways to minimize that debt. One of the most important topics, and the topics I'm most asked about in financial literacy, is credit reporting and the credit score. There are 3 companies that report for credit: Experian, TransUnion, and Equifax. They get information from your creditors, such as payment history, how long you've had the account, and how much you owe. They take this information and determine a credit score for you. Credit scores range from 300 to 850. The higher the score, the better the credit. The better your credit, the better rates you'll get. As I mentioned earlier, the lower monthly payments that you will have. We're going to talk about a little bit more in depth on credit scores in a minute, but I do want to say you should pull your credit report once a year. Everyone is entitled to a free credit report every 12 months. Go to annualcreditreport.com to get your free report. Keep up on your credit and check it for accuracy. We've seen a lot of fraud these days, and it's important to make sure that you are on top of that. People wonder what a credit score is comprised of. Is it rocket science? Is it some secret formula that no one else can figure out? Well, I can tell you, we've determined a credit score is 35% of your past payment history, 30% is outstanding debt, how long you've had credit is 15%, new applications or inquiries encompasses 10% of your score, and then the types of credit you have is also 10%. Outstanding debt at 30% is really important. An example of outstanding debt is if you have a $1,000 credit line on a credit card and you owe or keep a running balance of $500. You're using 50% of that credit line. That will negatively affect your credit score. I recommend that you keep your lines of credit at 20% of usage. So in that example, carrying a $200 balance would positively affect your score. Make sure that you encompass all your revolving line of credits and keeping them at 20% to keep that score favorable. And of course, keeping your payments on time, 35% of your score, is equally, if not more important. The final aspect to financial literacy is investing and retirement. I have 3 pieces of advice for you. Start young. The best piece of advice my dad gave to me when I was 18 and started working full-time at the bank was to participate in the company's match 401k program. Well, today, 27 years later, I can tell you that is the best advice I ever received. I can honestly say that my retirement, I will be comfortable in retirement because of starting at such a young age. Diversify. Diversification in investing is really important. You've heard the terms, don't keep all your eggs in one basket. That's really important in investing so that you can weather any stock market storm, and we've had plenty of those in the past decade. The final piece of advice is to have a plan and seek help when you need it. A certified financial planner or financial advisor are great people who are licensed and can help you have a plan for retirement, make sure you keep on track of that plan, or even help you with current investments that you have if you have extra money to invest. Use those people as resources. Other resources to help you with financial literacy can be found online. Bank websites such as pnc.com and fdic.gov have many tips and tools that can help educate you and your family on managing money. Finally, I would like to say that I think it is important that financial literacy be included in the high school and required in the high school curriculum. Currently, it is not. And some high schools don't even offer it as an elective. In the next couple weeks, I will be talking about why I think this is so important and should be included in the curriculum and what you can help to get it to happen. Thank you.